I do believe, and I agree that we're at the highest level of fund formation and company formation, but at the same level, I think we believe we're at the highest level of innovation and disruption, and I think that's going to continue going forward. A lot of these companies will not be able to be funded going forward, but the few that do, there'll be a subsection of them that I think are going to create interesting things that really change the way we work and operate.
Now, a lot of companies have delayed going public. Valuations have soared. There's been a rise of unicorns, so-called unicorns out there. How do you feel about that?
Yeah, our belief is there should be fewer instances of unicorns out there, primarily because majority of the M&A happens under $1 billion and very few companies are going public. So if a company expects or plans to be a unicorn, there better be a high probability that they can go public given their business model and unit economics. Otherwise, if their growth moderates, which happens to every company eventually, and they're not profitable, they won't be able to go public, their valuations will get crushed. And as we look at the past few years, it feels like there's been more of a focus on optimizing valuation versus exits. So we hope that changes going forward.
That said, you guys are investors in a number of venture capital funds, including Andreessen Horowitz and Accel,
Yes.
and they've got a lot of unicorns in their portfolio. Does that concern you?
So if you look at the top 10 VC firms, they've had a unique ability to invest in these iconic elite companies, whether it be a Facebook, a Pinterest, Airbnb, WhatsApp, Uber, and Lyft. So for those managers and for those companies, there is a market for those companies to go public. But for the broader venture community, unless you are in those iconic elite companies, I believe, or we believe, that M&A is the most likely outcome for those portfolio companies.
Andreessen Horowitz is one fund in particular that's made a big splash, though there's some controversy about how good their returns have been so far. Do you have any concerns there about the performance of Andreessen Horowitz?
So we don't have any significant concerns. I mean, we see the numbers. They've delivered very good returns over the course of the firm's life, partly because they've been able to invest in some of the elite companies I just mentioned. So we're very bullish on them. When they entered the venture capital game, they really changed the dynamic by offering services such as recruiting, PR, and even sales pipeline by introducing strategics to companies. And so almost on a daily basis, they'll bring strategics, Fortune 50, Fortune 500 companies to meet their portfolio companies. And for a number of them, those introductions have become a significant portion of their sales pipeline. So as you talk to entrepreneurs, that's a game changer. And we hear that over and over again. So overall, we've been very pleased. They've had great returns. They've invested in some of the iconic companies, and they are really changing the way venture capitalists operate. And you're seeing other firms mimic these types of services that they're offering.
I'm curious how you decide which venture funds to invest in and how venture compares to the other sectors that you're focused on.
Yeah, so we invest in a mix of venture capital and growth equity, and within that some buyout, primarily technology and some healthcare. When we look at venture capital firms, we are modeling 5x plus funds. And that's because on the growth equity and buyout side, a number of our managers have delivered 3x net funds to us with shorter timeline to liquidity, lower risk. So for venture capital, we are looking for 5x plus funds due to the longer timeline to liquidity and the increased risk. As I mentioned, the top 10 firms, they've been able to get into some of these elite companies, and so they've been able to deliver those returns by being in those iconic companies. Outside of the top 10 firms, we are looking for firms that can deliver multiples of their funds on just $500 to $1 billion exits. And in order to do that, you have to have a maniacal focus on fund size and ownership, which is very hard to do.
Going into 2017, what's your view on consumer tech versus everything else?
So we invest across the spectrum of consumer and enterprise. I feel we're still bullish across the board. I think just with consumer in general, we like to see companies that are a bit more durable. On the enterprise side, if a company's doing well, it continues to do well year over year, whereas on the consumer side, there's a bit more volatility. So with that lens in mind, I mean, we're still constructive both on consumer tech and enterprise.